All right, let's dive into the world of futures trading.
Oh, yeah.
But not just any futures trading.
Right.
We're going deep on Stanley Druckenmiller,
One of the greats.
a legend.
Absolutely.
You know him for bold moves
Oh, yeah.
and massive success.
Massive success.
But specifically, we're
Right.
breaking down
Wait.
his big bet philosophy.
Correct.
High risk.
Oh, yeah. High reward.
Huge reward potential.
Exactly.
If you can stomach it.
So to make this all a little more digestible,
Okay.
we're working with some excerpts from a text
Right.
that explains his approach in a way that anyone can understand.
Perfect.
So you don't have to be a Wall Street wizard to follow along.
That's what we like to hear.
All right, so
Yeah.
what's interesting about Druckenmiller is that he doesn't get caught up in the hype of individual stocks
Right.
or assets right away.
He's not looking for the next hot stock tip.
Exactly.
You know, he goes big picture first.
Oh, really?
Yeah, he calls it a macro over micro approach. Okay, so what kind of macro stuff are we talking here?
Think global economic indicators
Okay.
like interest rates,
Mhm.
inflation, central bank policies, even political developments.
Wow.
He wants to understand those underlying currents that move the entire market
I see.
before he even considers
Yeah.
specific investment opportunities.
So it's all about understanding those big forces
Yes,
before zeroing in on anything specific.
exactly.
That's fascinating.
It is. And
Huh.
one thing he really stresses is market liquidity.
Okay, now I know liquidity has something to do with
Yeah,
how easy it is to buy or sell something.
yeah,
But can you give me an example
of course.
that's a bit more relatable?
Sure, imagine you're trying to sell a rare vintage comic book
Okay.
versus selling shares of, say, Amazon stock.
Huh.
Finding a buyer for that comic book quickly,
Yeah,
especially at the price you want, could be difficult.
that's true.
That's low liquidity.
I got it.
But with Amazon stock, there are tons of buyers and sellers, so you can trade large amounts
Yeah,
without really affecting the price.
it makes sense.
That's high liquidity.
So that's...
And that can be just as important as the perceived value of the asset itself.
Wow.
Yeah.
Okay, so Druckenmiller starts by zooming out
Right.
to get that macro view
Uh-huh.
and assess liquidity.
Yes.
But then what?
Then comes the exciting part, his famous big bet philosophy.
Ooh, big bet.
This is where things get interesting.
Lay it on me.
Instead of diversifying across a wide range of assets,
Right.
he concentrates his investments in a few high-conviction ideas.
So he's not spreading his risk around.
No, he's not.
He's putting all his eggs in a few baskets.
You could say that.
That sounds a little bit like walking a tightrope.
It can be.
I mean, the potential payoff could be huge.
Absolutely massive.
But the risk must be through the roof.
That's the trade-off.
High risk, high reward.
Precisely. And this approach wouldn't work without incredibly strict risk management.
Okay, so how does he keep from losing everything on these big bets?
Well, he has a couple of key tools.
Right.
The first is called a stop-loss order.
Stop loss.
Let's say you're holding a stock and you set a stop price
Okay,
below its current market value.
gotcha.
If the stock drops to that price, the order automatically sells your shares.
So it's like an automatic safety net.
Exactly. It limits your losses.
I like it. What's the second tool?
The second is position sizing.
Okay,
He meticulously calculates how much to invest in each trade.
to manage his exposure.
Yes, to make sure he's never overexposed. Even if he's extremely confident in a trade,
Right.
you wouldn't bet your entire life savings on it.
That's a good point.
You got to be smart about it.
It sounds like his approach is not for the faint of heart.
It definitely takes a certain kind of investor
Someone who's comfortable with risk.
and who's able to stick to their plan.
But even with all the planning,
Yeah.
markets can change on a dime, right?
Oh, absolutely they can. And that's why flexibility is so crucial. If the market shifts or a trade no longer aligns with his macro outlook, he's not afraid to exit quickly.
So he's not afraid to cut his losses.
Nope. He's not married to any position.
He's got to stay nimble.
Exactly.
So we've got the big picture view.
Yep.
The calculated big bets,
Mm-hmm.
the safeguards,
Right.
and the adaptability.
The whole system.
What else is there to this guy?
Well, while he's driven by macroeconomics, he also uses technical analysis.
Oh, really?
Yes, to fine-tune his entry and exit points.
Interesting.
He looks at things like support and resistance levels.
Now, remind me what those are again.
So support and resistance levels are basically price points where a stock tends to stall or reverse its trend.
Yeah.
Think of it like a map that helps him navigate the market's ups and downs.
So he's combining the grand strategy with the tactical details.
Exactly. He's looking at the big picture and the finer points.
That's impressive how he weaves all these different elements together.
It really is. His approach is unique.
And it's clearly been successful for him.
Oh, yeah, incredibly so.
But I imagine it's not a strategy for everyone.
You're right. It takes a certain personality and risk tolerance.
But I think there are definitely lessons we can all learn from him.
Absolutely, even if you don't adopt his whole approach.
Right.
There are pieces you can take and apply.
So if you were to take just one element of Druckenmiller's approach
Mm,
and apply it to your own financial decision-making,
okay.
what would it be?
That's a great question.
I think for me, it would be his focus on market liquidity.
Interesting. Why that one?
It's something that's often overlooked,
You're right. It's not always top of mind.
but it can be incredibly impactful.
It can make or break a trade.
It's a good reminder to consider not just what something is worth,
Uh-huh.
but how easily you can actually buy or sell it.
That's a crucial point.
What really resonated with you,
I think his unwavering dedication to risk management,
even with the big bets?
especially with the big bets.
That's smart.
Yeah, it highlights that successful investing isn't just about being right. It's also about protecting yourself when you're wrong.
You've got to have a plan for both scenarios.
Exactly.
Well, listeners, that is Stanley Druckenmiller's big bet philosophy.
A fascinating approach.
As you explore your own financial strategies,
Yeah.
keep these principles in mind.
Think, manage your risk, stay flexible.
And be sure to let us know.
Yeah.
What other insights
What else are you curious about?
you'd like us to uncover in future deep dives?
We're always looking for new topics to explore.
Until then, happy investing.
And stay informed.